everybody. Thank you for the time. And I know every one of you have got quite busy schedules and is running around, collecting money, sorting out problems, ducking and diving COVID, trying to get business running in a middle of load shedding. So we face 150 other challenges apart from the biggest challenge that we have, and that is to keep business cash flush. And with that in our mind, I think that is probably one of the biggest things today that people are focused on. Years and years and years and years ago, when I was still young, the margins were so big and cash flow wasn't such a high on the agenda item. But in today's world, it is very serious, with margins being this small, the requirement of cash is this big. So the stress in the credit control or risk mitigation or risk management departments are huge. So there's lots of things that we can talk about today when it comes to managing, mitigating, controlling risk, or understanding risk, or having your finger on the pulse of risk. But what I want to do a little bit is just to create a little bit perspective as to how we can eliminate a lot of our stresses before we actually engage with the client. So let us start with that. I think personally, a lot of businesses are their own worst enemy. And what do I mean by saying that? I mean that we are our worst enemy because certain of our processes are not correct, or are not in place, or are not up to date, and therefore it's not working correctly and it's not delivering the correct deliverable to the client. So it is vital for us to understand what it is that the client is going to require from us to make sure that they, in the end of the day, can process our invoice document for payment. So if I look at it, I mean, being in the credit world for many years, I know that problems like incorrect invoicing, incorrect pricing, no purchase order, those kind of things create whips for our own backsides. We must ensure that we have certain things in place. Firstly, credit policy. A credit policy that is correctly drafted, regularly reviewed, driving the correct behavior, but it mustn't be a document that is driven from a level of, I would say, the credit manager's level. It must be driven from a CEO, CFO, COO level. Those are the people that must have the total buy-in into your policy, and they are the ones that needs to drive the behavior. And each one of them in their area have got different accountabilities and different behaviors that needs to be driven. In your financial area, your CFO needs to drive the correct behavior when it comes to the financial side of it. In the operational side, it is a different behavior. What in operations needs to be corrected to make sure that the flow from the O2C part, O2C, order to cash part, is correctly mapped out and driven by the correct people in the correct areas. There must be clear ownership. Everyone must understand what activity in that policy belongs to whom and who's going to drive it. And not just understand the activity, but needs to understand what the activity is and what it means to have that activity completed. Engage all parties when engaging with a new client. Very critical to understand what is needed from an operational side, what is needed from a financial side, and what is needed from a procurement side. Because if you do not understand that, you are going to, each one of you, drive in a different direction, getting a different answer and getting to a different outcome. One outcome: product, payment; service, payment. Clear line of activities in between, clear line of accountabilities in between. A lot of businesses have a lot of people working extremely hard in that business with a lot of activities. But because the activity is not clear and the accountability is not clear, the outcome is not clear. And if the outcome is not clear, then there is going to be a shortfall, and someone say, we're going to, die pap gaan op die grond val. The porridge is going to hit the floor. And that is going to be problematic. And that's what we're finding currently. Now we're sitting with a lot of new risks that are coming to the foreground all of a sudden. This COVID process, or this COVID period, or this pandemic has created a lot of things. The first thing that it's created a lot of backlog. And I'm talking backlog in everything. Backlog in the court area, backlog in sub-C. And those are critical things that we as credit people need to have to understand exactly what our stance is with our client. So now we need to employ alternative means to understand what's happening. If it is that we are applying to have a certain client taken to court, and they are, and the court date is not set because we don't have clarity of when it's going to happen, then we need to employ other avenues to make sure that everybody knows that Martin Petzer Pty Limited is not meeting their obligations right now. List them on every bureau there is. Make it known to everyone that Martin Petzer Pty Limited is not meeting their obligation. But you must be 100% sure that you are correct in your process, in your mitigational reasoning. If you don't understand that, if you're not sure, don't even go that route, because you are just going to set yourself up for a hiding of note. Very important. Then drive these solutions. But if I say engage all parties, engage operations, engage sales, engage marketing, credit control. Talk about the client, understanding the client in its entirety. Know where the client is, know what the client's activities are, know what they're up to, know where their pressure points are, know who to speak to, and escalate. If you are not getting what you want, escalate it within that business. Don't be afraid, because in the end of the day, it is your money that is in that client's possession that you need to have an outcome on, and you want to get that cash back into your possession. So if you want to mitigate your risk of not getting paid as quick as possible, you need to escalate it right to the top. I know there's a lot of businesses, and a lot of times that you will find that the CFO of a specific business is not specifically residing at the premises where you are wanting to work with. But sometimes it's very necessary to escalate it to them. If you are in the credit control space, or in the supervisory space, or in the credit management space, and you feel that you may not be the right person to deal with the person at that level on that side, then involve your CFO, involve your sales director, and get them to go with you, because you're the one with the knowledge, you're the one with the information, and then go with that person and speak with the client on a very senior level. But if you want action, you need to drive yours continuously. Gone are the days that we send a mail and the client comes back on the mail and says, "You shall pay you at month end." Now comes month end and he doesn't pay. What are you going to do then? Then you're sitting with a problem. You have to stay in touch with your client on a continual basis. Irritate them. What does the old saying say? He who shouts the loudest gets paid first. Now, the more drive there is from all angles, the sales guy comes to visit the client and says, "Guys, we know that this is the new product that you want, or this is the service that we're going to render during this month. However, this is the current status of your account. Are you aware of that? Are you happy? Are there any concerns? Is there any reason why you might not pay this?" We must stay on top of anything that could prevent the client from paying us. It is too late when we get to month end and the client says, "Oh yeah, I said to you in the beginning of the month that I'm going to pay you, but then in the meanwhile I discovered." He discovered and couldn't take it up with you because you didn't take it up with him. If you were in constant contact with them, you would have come across these challenges that the client is facing. You're supporting tools to do certain functions for you that can free your team up. I always say a credit control team is there to do one thing, collect cash. Now, I know you might say, I'm the credit manager, I don't do the actual collection. You drive behavior. You must make sure that your credit controllers are not bogged down with other activities. What I have found is, and I'm talking in experience, in my own world, that I'll walk up to a credit controller and I'll say, what are you busy doing? Oh, I'm busy writing a report. Writing a report for who? The sales manager of a specific region wants to know which of his debtors are in an overdue state and in what state are they and why are they in that state. There are tools available for you where all of this can be automated. So by a click of a button, that person can get that information for themselves. So it's not necessary for a credit controller to be sitting and writing reports for someone that could have got that automated. Credit application processes, that can be automated. Approval processes, that can be automated. There's a lot of functionality within your realm that can be automated. But if you don't use those tools, you are going to bog your team down with a lot of administration, and the main focus that they have, collecting the cash, is not going to happen. And then in the end of the day, a lot of businesses wonder, why are they cash strapped? So understand what it is that the client is going to need from you right up front, because if you don't, you are going to do the wrong deliverable. You're going to deliver it to the wrong person. You're going to deliver it to the wrong department. Clear map as to what the process is with the client. This is where the engagement happens. This is the next step. This is the next step. This is the next step. This is the outcome. Cash in the bank. If you understand that process, map it and have it signed off by not just your own team, not just your sales team, but also the client, so that the client can be held accountable and say, Mr. Petzer from Martin Petzer Pty Limited, you said this is our O2C process. This is what we do with an order. This is how the order flows through our process. I had an occasion in our business that I worked in where the client said very clearly, if you do not have a purchase order from us, do not deliver the product. Clear. Your team needs to understand that. It should be a policy document in your world that if a client gives you a clear instruction like that, you may not deliver product because I almost want to say, I want to joke, but it is punishable by death. Death meaning the end of your little career in this business, because you are going to break the rule. And the rules mustn't be there just to have some fancy document and say, oh, we have this beautiful credit policy. No, it must be implemented. Because if it's not, you can take it and toss it out the window. Because if the policy is not implemented and worked according to very strictly, then you will have occasions like this. Because people will say, but the client needed the product. He needed to give you the purchase order before. Because what happens? This is what happens. You send the invoice, he says, where is the purchase order number? Say, you didn't give it to me. So if you do get it eventually, you then put it on the document. Then they come back and say, but the purchase order date is after the invoice date. How can you have this? So now you have to credit the invoice, re-invoice it, put the purchase order number on, and that is 120 days later. Guess what happened to your little margin? It's gone. So what did you do? You said, here's my product, have it for free, because there's no margin. No profit. I just give it away. So it costs you money, 10 Rand to make it, and you gave it to the client for 10 Rand eventually, so you made absolutely no money on it. Very critical that the only way you're going to drive the correct behavior is to understand what the behavior is and what the outcome is that you want. So, just to quickly recap on the first. Don't be your own enemy. Ensure your processes are correct and aligned, not just with your policy, but also with your client. Don't move outside your policy with your client. If your client is saying to you, this is what we want, if you have made a decision that is clear in your will that our terms are 30 days, that's it. And a client comes to you and says, I want 90-day terms. Immediately you must understand that your margin can't be 5% because your margin is 5% on 30 days. If it goes to 90 days, your margin must be 15%. I'm just using a figure. But it has to escalate at the same pace as what you are going to wait for your money, because you are going to have cost of capital sitting out with your client, not just production costs, not just delivery costs, but cost of your capital. You're going to pay your bank interest and you're going to get nothing from the client to cover that expense. Very important. Policy driven. Everybody must understand that the credit policy in the business is driven from the top down. These people must accept it as the rule of the business. They in their different departments must drive it down and say, if you break this rule, I will deal with you. And I will deal with you in a severe manner. And it must be in your company's policy that if this happens, then this is going to be the consequence. Just as much it is, if you come to the office drunk, you will be dismissed. If you steal, you will be dismissed. If you break the credit policy rules, you will be dismissed. As simple as that. It is a rule of the business that is making the business survive. That is the start of mitigating risk. That is the start of controlling risk. That is the start of understanding your risk in its entirety. Because if you don't do that, then your client is not going to understand how he's doing business with you. So when sales engage with the client and they say, yes, we like your product. Yes, we want to buy your product. What is the terms around this? Our terms are strictly 30 days. That's it. Do you give settlement discount? What does the policy say? No or yes? Yes, we do give settlement discount on one condition. You pay the full invoice outstanding on 7 days. Then we give you settlement discount. Now you got your money in early. No, we don't give settlement discount. Then that's the rule. If your terms are 30 days, the other day I had a discussion with a client and they said, you will have to adjust what you see as overdue on our clients. I said, what do you mean? They say, these clients always pay us on the 7th day of the next month. I said, what's your terms with them? It's 30 days from date of statement. I said, that is last month. So they are overdue. They are breaking your rule and you're happy with that. That's not the agreed term. Enforce your term right from the beginning. Enforce your rule right from the beginning. Enforce your policy right from the beginning. And you will save yourself a lot of unnecessary risks and a lot of time in mitigating things that could have been avoided right from the beginning. If your credit team are not this close to your sales team, believe me, trust me, you're going to have 2 different people with 2 different agendas at one client, and the client is going to take the easiest route out. The sales guy is going to say, don't worry, man. Our credit control team isn't that strict. If you want 60 days, you can have 60 days, and they'll sign off on the credit application. That's not the rule. Reject the document outright, right from the beginning, and they will understand. Break the rule, there's a consequence. So now you want to drive solutions. You can't drive a solution if you don't understand where it comes from. You can't have an outcome if you don't have input. So if the input starts at the policy and how you drive everything, then make sure, or then you will have a solution at the end of the day. Clear accountability to tasks and timelines is very important. If someone says, this needs to be done, or if a client comes with a query and he says, I need the pricing to be corrected on my invoice, and you go to sales and say, the invoice will not be paid, price is not correct. And they say, we will look at it. No, you won't. I will be back with you tomorrow. Then it needs to be done. Corrected. Price. Credit note done. Credit note raised. Re-invoice done. So I can go back to my client and I can recover our monies from our client. If that's not done, you will be held on a line by your sales team for a long time. But the minute they understand that you drive things on a constant basis and you eradicate your business from these inefficiencies, they will know that this is a team not to be messed with, because you are driven by a control that is in place and is owned from the top. Identify risks. Very clear. Understand what the risks are. If you don't know which clients are risky or which clients are problematic or which could be a problem for you, where are you going to focus? Take your client base, understand them, understand the risks that they have. If you don't have the information that can help you do that, implement or employ someone that has that knowledge and that can help you drive that information, that can immediately elevate to you that in your world, Martin Petzer Pty Limited might not be seen as a risk because you're his major supplier, and therefore he will pay you. But everybody still there? Can someone just raise a hand? I saw we quickly went offline there. Just someone raise a hand and tell me that you're still there and you can still hear me. Okay, there we go. Thank you. All right. So, and you see how important it is. I immediately knew that there was something wrong, and I've asked for a response, and someone said, hello, yeah, we can still hear you. But if that didn't happen, I might have been talking to myself here for the last 20 minutes. That could have been a problem. I don't like to hear my own voice. It may seems like it. So, in your process, your engagement, now that you've taken your credit control team, now that the policy is driven from the top down, now that everybody in the business understands what the policy is and what their accountability is and how accountable they're going to be held for what they do, your credit control team now has tools that helps them free up their time to do what is important to them. Get the invoice, get it to the client with the supporting documents, and please, if a client says, your invoice must reach me with the following attachments, don't send it there without the attachments, because all you're going to do is you're going to create a whip for your own backside. I'm not going to mention the client, but if I do talk about it, you will clearly know what I'm talking. Some of you might know. I engaged with a very large organization in South Africa because they owed me a lot of money. And when I engaged with the top accounts payable person, he said to me, do you understand my invoice payable process in my business? I said, well, sort of, the invoices gets there, they check the invoice, see if it's correct, and then they approve it for payment, or they return it to us for a query, and we fix the query and send it back to you and you pay me. He says, no, come visit me. So I visited him. So as I walked into the premises, I saw these trolleys standing outside the accounts payable team, chock-a-block full of invoices. And I looked at this and I said to him, what is this? He says, that's my process. And I laughed. He says, what are you laughing about? He says, my team takes an invoice that they just received And if there's a problem on the invoice, they put it in a trolley. At the end of the day, that trolley is taken, and it's taken outside the office to the back of the queue of those trolleys that you just saw there. When that trolley gets to the front, we will take that invoice and we will now give attention to the problem on it, and we'll send it to you and say, this invoice has got the following problem on it. We don't waste our time fixing your problems. We will process an invoice when it's correct for payment. That, to me, scared the living daylights out of me. I went back to the office and I made 100% sure that every touch point that we have with that client is 100% correct. But not just that client, every other client, because that could be happening in everyone's world. Why? In South Africa, they are looking for reasons not to pay you. They don't look for reasons to pay you. Everybody is holding on to their cash. So make sure that whatever process you have in place is aligned with your client's process and that you understand what they do. If a client says to you, if your invoice or my correction is not done within 3 months, I will hold your payment. Take them serious. Because if the day comes and you say, I want you to pay me, and he says, remember this query from 3 months ago? Your sales team still hasn't corrected it. Guess what's going to happen? No cash. No cash. No incentive for the credit control team. No KPI made. No DSO targets met. CFO unhappy. COO unhappy. CEO unhappy. Investors unhappy. And so the list goes on. Why? Because we didn't keep our process aligned with our policy and the process of our client. I have a little simple formula. Control, mitigate, report. As long as you're in control, you don't have to mitigate anything and you don't have to report anything. The minute you lose control, you're going to start mitigating and you're going to report a lot. Why is it that we have so much reports? Because there is so much happening that is not correct. The more accurate we are, the less reporting we'll have. The more correct our systems are, the more correct our processes are, the less risk we have. How do we mitigate the risk? Start with our own processes. Make sure that we understand what we do. Credit control team must understand one thing very clearly. They are there with a function to collect the cash of the business. If that's not happening due to some inefficiencies somewhere in the business, they must escalate that. We are not in the game of making friends. If I wanted friends, I'll take the yellow pages and I'll start phoning. There's lots of people there who wants to be my friend. And I'll be their friend. But in business, there is certain rules that I need to abide to make sure that I do my function according to my responsibility and my accountability 100% correct. I cannot do that if someone else is influencing my outcome by an incorrect activity. How am I going to correct it? By speaking to the person. That person doesn't respond or doesn't react, escalate. Who do I escalate to? My direct superior, his direct superior. Nothing happens, escalate further until you have a reaction. People will learn very quickly. Do not mess with the credit control department. Do not mess with policy in the business. Do not mess with a client that gives you a clear rule and instruction. This is how you do business with me. This is the most fundamental things in risk. Now we're exposed to a whole different ball game. This thing called working from home. Because the people are not all in one space anymore. So you can't just walk to a building and say, okay, why is my invoice not paid? And they say, oh, it's procurement. So you walk over to procurement and you speak to the guy in procurement. And you say, listen, Accounts payable says I must come and see you. You sitting with my invoice and you're not signing off on it. What is the problem? It doesn't happen. Distribution might be there because they need to be there because that's where it happens. Or services rendered might be there and they can tell you what's happening. But the accounting person might be working from home. So you need to engage with him like we are engaging right now. Or sometimes you will just need to get into your car and actually go there. I mean, I remember how many times I visited clients as a junior credit controller in my life. And it had a powerful influence. One day, a very specific client of mine kept me on the line. Didn't send me. In those days, we still had things called checks. Don't fall off your chair. It was real. Those things really existed. It's a little piece of paper. People wrote on it and says, pay Martin Petzer 10 Rand, blah, 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 and they signed it. And then I took that piece of paper and I went to a bank and I gave it to them and they gave me money. Those things did work, eh? But in any case, so he kept me on the line. So I said to the secretary or the receptionist, I said, do you have a boardroom? I'm waiting for Mr. So-and-so. He needs to see me because he owes me money. And she said, yes, there's my boardroom. I said, may I use it? She said, of course you may. I said, is there a phone in there? She said, yes. I said, may I use it? She said, of course you can. So what did I do? I went into his boardroom, took his phone and started phoning my clients, the rest of my clients, and started doing credit control from his office. So he walked in and he said to me, hey, who are you? I said, this is who I am. You owe me money. He said, what are you doing in my boardroom? I said, I'm phoning my other clients who owe me money because I'm waiting for you. And I can't just sit here and wait for you. I need to do something. And this is what I'm doing. Guess what? He gave me the money and got me out of his life very, very, very quickly. So sometimes we need to take drastic action to get a result. I mean, I just used a very simple example. I visited a guy at his house on a Sunday afternoon while he was braaiing with his friends. He wanted to get rid of me very, very quickly. That's very drastic. But if you do not take drastic action, your client will never take you serious. He will always think you are not serious about your money. He will always think you are not serious about your collections. He will always think you are not serious about protecting your margin. Very important. They want to break the rule, you break his rule. By not supplying him, by stopping his product. Don't threaten a client by saying, if you don't pay us, our policy is to stop supply. Stop supply. I know there's a lot of clients with a lot of muscle out there. And if your product is a vital product in their world, but there's other people also supplying that same product, they can easily go from you to the other suppliers. But there's a way and a means around this. Make sure that when they leave you, that you speak to the new supplier and say, just want to bring something under your attention. This is the reason why they left us. They didn't pay us on time. They continually queried unnecessarily. Make sure that everybody understands how these guys operate. The more you do that, the more successful you will be in the mitigation of your risk. Recap again quickly. Policy is there. Understand what it says. Drive the policy. Review it continuously. Have sign-off from the top, driving it down. Ownership. Be accountable. Everybody knows what their function is. Everybody takes accountability for what they do. And if it's not done, there is an outcome. Good or bad. Drive it with KPIs. If a salesperson doesn't have a KPI on his clients in a DSO format or a cash collection format, your business is not aligned. His function cannot purely be sell the product and get it out there. It must be the collection part as well. Because if he doesn't take accountability for the way it's delivered and that the invoice is raised correctly and all the documentation is attached to it correctly, then he will not be accountable for the collections either. But if that's correct, he will take this accountability with a smile on his face because he will know that he's done everything correct. And then it can purely be one reason why the client's not paying you. He doesn't have the money. Simple as that. So if a client pays me on 37 days, like this other client of ours said, They always pay me on 7 days. It means that they are cash strapped, your debtor. They must first make their collections before they can pay you. What is going to happen if they don't collect? You must understand the risk that they are having. Where are they getting their payment from? Who is their client? Who is the slow pay? Is it all eggs in one basket? Are they only supplying one specific debtor? That is the majority. I know we all have this 80-20 scenario, but understand the risk. Even now more so, because if you supply them and they supply someone else, and that person or that company doesn't pay them, guess who's not going to get paid? You. So, risk control these days in this environment doesn't just end with your debtor. You need to understand where his risk originates from. And you need to understand how he or they are mitigating that risk. And if they don't have controls, then you almost have to help them to put it in place if you want to continue doing business with them. Because if not, that means you don't love your money. You don't care about collecting your cash. Right. Control, mitigate, report. If you don't have that, you're going to not control, you're going to mitigate a lot, and you're going to report a lot. If you are in control, mitigation is reduced, reporting is non-existing. It's reporting on your cash only. If you have clear cash flow projections, it means that the people in your department understands what is happening in their client's world. I can, with a smile on my face, report to you that my cash forecast was correct between 95 and 98%. That's how well the team knew their clients, their habits of their clients, and was in their client's face, because that gave them a clear deliverable. They could say, my client pays on the 15th of each month. My client's accounting closes on the 12th, and thereafterwards they process the invoice that they have for payment. But if you don't even know that, how are you going to know when your client's going to pay you? Understand the client. Escalate. Do not wait. Do not wait another week. If the client doesn't answer you, if the client doesn't give you what you need, if the guy doesn't come back to you with a response, escalate. Go to the next person. Say, this is what's happening in your world. I need an answer. Where is my invoice? Why are you not paying me? You should know where the invoice is. But why am I not getting my answers? Why am I not going to get paid? Because in my world, everything is correct. Correct invoice, correct documents, correct price, correct process, correct product delivered to you, signed off proof of delivery, purchase order is there, it's correct. I want my money. Abide now to my rule. I have done my part. Very, very critical. Now, how do we assess risk? New risk. It is so critical and so vital that we understand every little thing that we see these days. We as Inoxico have a process called Fabric. That's the automation of a credit application. And recently one of our clients phoned me and said to me, I have a problem. I said, what is the problem? He says, well, we went through the whole Fabric process and we sent the credit application to the client, only for it to be declined in the end of the day. If your process was correct, it wouldn't have happened. I said, well, where did we go wrong? Let's look at where we went wrong. The very first engagement with the client, the view of who the client was supposed to be, already told me where the problem was. It says this client is in a AR final deregistration. Understand the risk. What is the risk? It means that that business was deregistered by Sub-C because they didn't do their annual return. So, if you had a signed credit application, it would have been null and void because the business doesn't exist. If you already engaged with a client, your invoice would mean nothing because that debtor doesn't exist. You can't sue them because Martin Petzer Pty Limited has been deregistered. Stay on top of the risks, what it means, where you'll find it, and how to mitigate it, and how to prevent yourself engaging with a client already in that negative state. If you need more information about these things, you are more than welcome to engage with me, and I will assist you. All right, that, my dear friends, is the end of my story for today. So, quickly, have a policy. Make sure it's reviewed constantly. Make sure it drives behavior. Make sure it addresses accountability, responsibility. Make sure it drives outcome if this is not met. Make sure everyone understands if I don't do what this policy says, there is going to be consequences. I'm talking internally. Now you've got that. Understand that your client must also know what your policy says. If you do not pay me in 30 days, I will stop your account. If you do this, this is what's going to happen. But also understand the consequences in the reverse. If your client tells you that these are my rules and you decide to abide on them, that you meet those rules, because if you don't, you will not get paid. Work together with your sales team very closely. Operations very closely. That you don't have the silo working with your debtor on the other side, and that you're going to have a client looking for the easiest way to deal with you. Be sure that you have one outcome in mind. Escalate. Escalate internal, escalate with your client. If a salesman doesn't want to be your friend because you've escalated him, so be it. I'll send the yellow pages to you. You can phone and find a few more new friends, or I'll be your friend. Control, mitigate, report. You be in control. You won't have to mitigate. You won't have to report. You're not in control. You're going to mitigate a lot. You're going to report a lot. Assess your risk. Understand your risk. Understand what you deal with. Thank you very much, and thank you for listening. Are there anybody that has a question that they want to raise with me right now? I see there's still a few hands up in the air, but I think it was because of my question just now. So if you can just take those hands down, and then if anyone has a question, you can just raise your hand, and I will give you the opportunity to chat. Sure, that is it. Afsa, you've still got your hand up? Afsa, have you got a question? Oh, you're breaking up badly.
Everything's fine on my side.
Okay, all right, I hear everything's fine. Okay. No questions? Okay, guys, if you don't want to use this forum to ask a question and you do have something that is of concern to you, please feel free to contact me. If you don't have my contact details, speak to Fatima, whose contact details you definitely have, and she will give it to you, and I will gladly assist you. Thank you very much. Have a good day. Take care of your risk, and the money will take care of itself. Thank you very much. Bye-bye.